The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off about 24 minutes to go until the opening bell, and you got markets retreating from yesterday's high. Yesterday, folks, you were at 52.40 when I got off the air. We just made it down to 51.85. Technically, you're negative by 16 points right now in the futures. That's negative by about 1/3%. In the S&Ps, trading just under 5,200, 51.98. NASDAQ 100, we're negative by 99 points. Call it 100. Negative by 0.5%, 18,130 right now. You get the Dow, barely in the negative by 35 points. That's about 0.1% in the red. And the Russell, negative by about 0.6%, off 13 points at 2,036. How about Bitcoin? Quite a little pullback on Bitcoin. You made it to 62,735 this morning. We're trading at 63,620, off about $3,500 on the session. If you're holding any Bitcoin and you're not prepared for volatility, then I don't know what to tell you, because either way, you're going to get volatility in Bitcoin. That's for sure. I mean, look at this. Just from last Thursday, you're off by what, $11,000? Just from where you were at about 10 o'clock last night, you're off by almost $6,000 on Bitcoin. Volatility persists. How about crude? Yesterday, we hit 82.50. We're trading at 82.09 right now, technically flat on the session. But as we've been talking about, a series of higher highs and higher lows in that crude market. You jump over to gold, we got some action in the yen. Bank of Japan hiking for the first time in almost 20 years, man. I think it's 2007, correct? They hike. They're back into a positive 0 to 0.1% rate. We'll get into that in a moment. Nonetheless, you have the yen weakening on that news, as they really don't put out any guidance in terms of when they're going to hike further. Nonetheless, you have the gold contract off about $4, trading at $21.60 right now. You got silver off about 19 pennies at $25.07. And we jump to notes and bonds 1 day ahead of a Fed decision tomorrow, 2 p.m. Eastern time. You're looking at the 10-year right now. Positive by 8 ticks. You're talking about a 10-year yield sitting just at 4.3%. 4.3%, the yield on the 10-year. We got a little bit of higher price, lower yield on the 10-year. We're back above 110 right now. You jump over the dollar index. As I mentioned, we'll jump over the yen next. Dollar hit 104 this morning. We're trading at 103.88 right now. You could make the case that gold is holding up pretty well right now, considering the strength that we've had in the dollar index, right? You check out the dollar index. There's your 104 price point early this morning. You were at 102.66 as of last Wednesday. Last Tuesday, you were at a 102 handle. It's interesting if you just take a look at gold, right? Look at where gold is. You're right back to where this gold contract was on Tuesday. On Wednesday, nonetheless, we've had the dollar strengthen dramatically over that time. That usually will hurt the gold contract if you're priced in dollars accordingly. We'll see where that goes. You jump over to the VIX this morning, pretty elevated considering what's going on. We got a market sitting at 5,200, folks, and we got the VIX. Keep your eye on it, man. And I've been talking about it in this program, but ever since December 12th, you hit a low of 1181. That is a series of higher highs and higher lows. Look at these lows, right? January 24th, a low of 1241. February 9th, 1269. March 1st, 1308. March 14th, 1342. The market has just been creeping higher over that time, and the VIX has been creeping higher as well. Not always indicative of a strong, enduring market. A little bit of volatility premium, maybe a little bit of fear at these price levels. We'll see where we go from there. And dollar yen. Let's do it, man. Dollar yen, kaboom. Look at that move. We're back above 150.50. We talked to our man Teddy Kegstad. Always good conversation. Tomorrow, Wednesdays at 40 past the hour. Put it on your calendar, man. Teddy's been talking about, folks. He had a great interview last week talking about, the area that this could rise to, right? This is where the Bank of Japan might get a little bit uncomfortable. 150.50, the 151 area, they might step in. They weren't going to step in around this area last week. Great analysis, folks. You can always check out any interview we do on our YouTube page. Just search TFNN. Please like our channel, subscribe to the notifications on there. That's all completely free. Everything we do right on our YouTube channel. The yen in a dicey area yet again, and pretty interesting. The first time they hike since, I think it's 2007. 2007. Let's pull up the article. Japan ends the era of negative rates with few clues on further hikes. That's the reason why you got some weakness here. So they come in a little bit dovish. Market might have been looking for a little bit more. They voted 7-2 to set a new policy rate range. And check it out, 0 to 0.1%. If you're looking for yield, how about that yen? Can't help but sound a little bit sarcastic. They were at the negative 0.1% short-term interest rate. Pretty interesting. They scrapped its complex yield curve control program while pledging to continue buying long-term government bonds as needed and ended purchases of exchange-traded funds. But here's the key, at least what the market's paying attention to so far this morning, the lack of signaling on any future rate hikes weighed on the yen, which slid past the closely watched 150 mark versus the dollar. Yeah, well, benchmark government bond yields edged lower. Government bond yields edged lower as they hike. Pretty remarkable. But what happens to the indices over there? They love a weekend, man. The Nikkei reclaimed the 40,000 level. So we'll see where we go from there, man. And yeah, so there is the Bank of Japan governor, Ueda. I better get how to pronounce that one, as he's going to be talked about many times. Emphasized that even with the end of negative rates, it's important that financial conditions remain accommodative. There is still some distance to 2%. I would say so. They just got into positive, man. Negative rates don't work, folks. I mean, to some degree, but we had this conversation many times during COVID, right? Our man Larry Pesavento would always do a great analysis. It just doesn't compute. I mean, if you understand how economics works, folks, you have consuming, which is the C. You have savings, which is the S. If you consume now, then you don't save. If you save, the reason why you save as opposed to consuming is that you're usually able to save and consume more in the future by earning a yield on those savings. If you actually save and earn a negative interest rate on your savings, there's no incentive whatsoever to save. You end up consuming. It just doesn't work. It blows apart modern economics, basic economics, to put it. Considering the gap, I think we will conduct normal policy, as I mentioned earlier, keeping the importance of maintaining an accommodative environment in mind. And that tone clearly showed that their first hike in 17 years is not the start of a pedal to the metal tightening cycle of the sort seen recently in the U.S. and Europe. So a little bit different language out there. You got the prime minister out there. The government believes it's appropriate. The accommodative financial environment will be maintained from the perspective of taking a new step forward in light of the current situation and further ensuring positive economic developments. Pretty remarkable. You go back to 2007, folks. We are living in interesting times, to put it lightly. So there's your action on the yen. We go back to a 5-minute. There's your volatility when the news comes out, and boom, you spike higher from 149.22 to 150.53. And yeah, so that's going to be an impact on the dollar, of course. There's your DXY. There's when the news comes out on the dollar. You were trading at 103.60. You spike all the way to 104.05. And we'll see. The day is young. We'll see where we go from there. We get the first hike in, like we said, 17 years, man. Pretty remarkable. And where do you jump to? I mean, you jump right to that area that we've seen a tremendous amount of resistance in the yen. You're back above 150. You're up to the recent highs we had in February. You're approaching the highs we had towards the end of last year. That, of course, weighing on gold a bit. But nonetheless, we'll see where we go from there. We got a lot to talk about, folks. We're going to talk some NVIDIA when we get back. We'll talk some micro supercomputer as well. Stay tuned. We'll be back in 3 minutes, folks. Don't go away. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Attention all opening call subscribers. Next Tuesday, March 19th, Basil Chapman will be hosting a live 90-minute webinar for all subscribers. From 4 to 5:30 p.m., Basil will take subscribers through an educative journey, giving insight into how he will approach this volatile market. Basil Chapman's opening call newsletter has a 30-day money-back guarantee for all first-time subscribers, and all subscribers get access to his trove of webinar archives, so you have nothing to lose. Go to the newsletters tab of TFNN.com and sign up today. We'll see you March 19th. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This portion of the morning market kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the fund involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We got S&P futures off about 14 points right now, catching a little bit of a lift off the lows we had in the last half hour or so, trading right at 5,200 on the dot. To talk about some of the market action, let's jump over to our man Kevin Hinks. Every trading day, folks, 12 noon Eastern time, right here on Tiger TV, Fast Market from the Schwab Network. Your host, Kevin Hinks, Tom White, the outstanding team. They break down the day's market action. They're usually walking you through hypothetical trade setups, all of them involving options, all of them involving defined risk. And boy, we got some market action this morning. Kevin Hinks, good morning.
Good morning, Tommy Bryant. Yeah, we got a lot going on this morning, a lot of central banks. You got NVIDIA getting kind of this Steve Jobs Apple treatment, right, where there's a run-up to the announced, and the market, the stock sells off after. So high praise that he's getting the Steve Jobs treatment, but there it is in the price of the stock. It's had quite a run up into this meeting. So a little bit of sell-off here, not really that out of the imagination, but the central banks. Watch the dollar-yen today. I think that's going to be a real Japan that's been trying for 17 years finally have moved. Interesting. The dollar-yen will be something to watch for sure. We got the Reserve Bank of Australia. They left their rates unchanged. And then it goes to the Fed. And then it goes to the Bank of AS time on Thursday. So, but make no mistake, for our interest, Jerome Powell's announcement tomorrow morning and what's going to happen, Tommy, to the dots. What's going to happen to the overall level of interest rate cuts expected this year? That's what's going to move the market, I think, from Wednesday afternoon into the end of the week. So a lot going on here, that's for sure, Tommy.
It's a great summation of things going on. NVIDIA, pretty interesting in terms of technology, where we're going. What is the number? 208 billion resistors on that chip? Something like that, man. The mind can't even comprehend all those resistors. How do they put them in that space? But nonetheless, technology marches on. We got some action in NVIDIA. You got Micro Supercomputer. They can't blame them, man. They're selling a few shares at the price level they're at with an offering to raise a little capital. The market always a little skittish when the company comes out and says, we're going to offer some shares at this price level, take in a little cash. Can't blame them, though. Like you said, the run has been extraordinary. And then we go forward to the Fed. You mentioned the dot plots. We're going to get some new dot plots. The market is interested to see, especially where they think they might be going this year. I know they're going to put them out for 2025, 2026. As you've said many times when we've talked to you before, don't go too far out in the future. Try and stay current. As a trader, as an options trader, always doing this market, Kevin, are you looking for any kind of hints? Do you have any perspective? Do you have any biases in terms of where the Fed may be? Right now, the market may be looking towards June. You got any hot takes on where we might see the Fed tomorrow at 2 o'clock, 2:30 Eastern time?
Tommy, in my opinion, I think the economic data as we see it right now, strong Fed even think about lowering interest rates. Let's face it. When you look back from almost a month ago and the inflation data that we got on wages from last payroll number, wages have gone higher. At very best, the economic data when it comes to inflation is plateauing. You can make a case that it's turning back up. So I think Jerome Powell is really got to make a case. Think about the market, what it did, right? When Jerome Powell said 3 cuts, the dots said 3 cuts, the market immediately went to 6, trending towards 7. Now it's 3, and I think it's going to trend lower after tomorrow's meeting. Now, do we know that? No, I have no idea. But the data, which Jerome Powell is so dependent on, different story and look at what yields have done. Look at the 2-year, look at the 10-year, both creeping back up higher. So the market is starting to come to the realization that we're not cutting rates a bunch of times this year, and those numbers that originally started in March are getting pushed back further and further, Tommy.
And it seems like that just keeps being the case, right? In terms of no matter how many months we go forward, it seems like the market says, okay, we're a little bit ahead of itself. Maybe we got to push things back 3-6 months. And then here we are 3 or 6 months into the future. And we're having a pretty similar conversation. But as we've talked about, you got to follow the data. And that's kind of where the data is lining up. The Fed's got 2 mandates: full employment, unemployment, what's that, 3.9, even up from 3.7, and price stability. And boy, price stability, man, I think that's in the forefront right now. I appreciate you going over some of those numbers. One thing I remind myself, I was reading an article a couple weeks ago, and they were talking about just the recency bias of rates being so low for so long and how it's impacting, and this was an opinion, of course, but it's impacting so many people thinking those rates are going to come back down. And if we weren't in that environment, just kind of agreeing with kind of some of what you're saying, if we weren't in that environment and you look at the data, boy, they have some ways to go, man. We are still in an inflationary environment. And like you said, this economy actually might be heating back up with the prices, the wages that we see going forward. Pretty remarkable. So we got the keynote speak from NVIDIA. They're trading a little bit lower. This market's still sitting at 5,200 right now. All things considered, pretty lofty levels. With that in mind, we still have some equities coming out with their earnings. I know you always talk about FedEx, Nike. They kind of round out the season. That's at the end of the week. Do you guys have any equities you're talking about on Fast Market at 12 today, Kevin?
Yeah, so Wednesday and Thursday, you're right. There's a big group of names. So Likefolio is going to do a presentation today on Five Below. They actually have earnings coming out Wednesday after the bell, but it's so crowded that we're going to move ahead and do Five Below. We're also going to look at AMD based on the NVIDIA news. We'll talk about and trade AMD, and then we'll trade Microsoft. Everyone involved in AI, as much as we can get in one show and still cover Five Below. So a really good show today. AMD, Microsoft, and Likefolio doing a presentation on Five Below, Tommy.
You heard it, folks. I was jumping through those charts as you were talking about them. 3 interesting charts. I look forward to the program at 12. As always, Kevin, I appreciate the time on a busy morning, man. And we'll talk to you tomorrow on Fed Day as well. Have a great one, Kevin.
Thanks for having me on time every day.
Always a pleasure. Folks, check it out. Fast Market right here on Tiger TV from the Schwab Network every trading day, 12 noon Eastern time. And you heard it, 5 below. AMD and Microsoft shares coming up at noon Eastern time with our man Kevin Hinks, Tom White, and the team. And yeah, those are some charts, man. How about Microsoft too, right? Whew, just can't weigh this thing down. We got a high of 427, but all things considered, you're sitting at 415 right now. Consistent strength from Microsoft. Nonetheless, AI in the forefront. And as I mentioned, we'll talk a little bit about NVIDIA when we get back. We'll talk about that new chip they got. I think it's 208 billion resistors. We'll take a look at it. Pretty remarkable. Technology marches forward. AI marches forward. NVIDIA shares closed yesterday at 884. That's your daily. You put this on a 5-minute chart, and you see kind of the acceleration. And their CEO was speaking right at 4 o'clock yesterday. So there's your volatility on his keynote speak. And yeah, we're trading at 868. We're coming back for the opening bell, folks. Don't go away. We'll be right back. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the stock market open, and you got a little bit of a lift from the overnight lows we had at 8:30. You were trading almost 20 points lower on the S&Ps. Right now, you're negative by just 11 points, trading at 52.03. You jump over to the NASDAQ 100. We're negative by about 90 points. That's about 0.5%, 18,140. The Dow sneaks into positive territory. A little bit of volatility on the open right now. We'll call it flat, 39,221. And the Russell, negative by 10 points. We jump over to NVIDIA. On the heels of their keynote speech by their CEO at their conference yesterday, down 2.2%. You're off by $20. Excuse me. And as Kevin mentioned, it probably, a little bit of a case of, buy the rumors, sell the news. I mean, how do you over-deliver on the expectations that they have? It's almost impossible to think, and pretty remarkable in terms of what they come up with. So you have the CEO, the founder, showing off the new chips aimed at extending the company's dominance of AI computing. Now, the new chip is called Blackwell, okay? And it's going to be multiple times faster than the H100. They did not put the price tag out there. They alluded to it that it's going to be expensive. Shocker, right? The last chip, the H100, what was that pushing? Maybe $40,000 for a chip. You got Facebook buying like 350,000 of them, something bonkers like that. This one, 208 billion transistors. I think the last one had like 80 billion or 100 billion or something like that. So they are improving technology as they do, man. And yeah, so Blackwell, named after David Blackwell, the first black scholar inducted to the National Academy of Science. Yeah, talk about a tough one to follow, the H100. That's it. Pretty remarkable where they go from here. Yeah, and that was expected. They have to come out with the next ones. They're over $2 trillion right now. The market's been pretty euphoric, to put it lightly. And yeah, his quotes here, it's going to be the engine to power this new industrial revolution. NVIDIA is working with the most dynamic companies in the world. We will realize the promise of AI of every industry. I mean, this is his promo speech, okay? He's up there being the cheerleader, of course. And Blackwell, the new chip, is going to have an improved ability to link with other chips and a new way of crunching AI-related data that speeds up the process. I was reading one article last night saying it's twice as fast. I mean, twice as fast as the chip that's already changing the world, right? Part of the next version of the company's super chip lineup, meaning it's combined with NVIDIA's central processing unit called Grace. Users will have the choice to pair those products with new networking chips, one that uses a proprietary InfiniBand standard, not sure what that's about, and another that relies on the more common Ethernet protocol. I guess I understand Ethernet. I guess we're going to have to learn what InfiniBand is. I'm not familiar. NVIDIA is also updating its HGX server machines with the new chip. We all know that sales are flying when you look at the projections. So 2023, they do 27 billion, 2024, 61 billion, and 2025, you're talking about $110 billion of revenue. Not bad, man. Not bad at all. Blackwell will help drive the transition beyond relatively simple AI jobs, such as ChatGPT, that we're all familiar with, where it recognizes potential speech. Maybe you create an image. No, this one, okay, just by talking to a computer, you might start creating three-dimensional videos. Imagine that, right? You say, create me a video of yada, yada, yada. All of a sudden, you get a 3D video that's created. You think about how content is going to go. Television, shows, content, no matter what. It's just remarkable what the future may look like. For all its success, NVIDIA's revenue has become highly dependent on a handful of cloud computing giants. I don't think that's going to change, though. I just said, how many did Meta buy? I think they bought like 350,000 of those chips, let alone everybody else plowing in. I think it's almost 40% of their business, might even be more, is just some of those big tech companies. But that's who controls AI right now. We'll see where we go from there. Nonetheless, you got NVIDIA shares. Look at that. They clawed back, only down by about $11 right now. $11 is like 5 minutes of volatility for NVIDIA shares. Down by 1.3% to kick things off for NVIDIA. We jump over to AMD. They'll be talking about AMD coming up on Fast Market today with our man Kevin Hinks at 12 noon. They're giving back some of those gains as well. AMD off about 3.2%. And SMCI. So, super micro computer, right? Yeah, let's pull this one over. All right, super microcomputer. Now, they've been a huge AI play. And boy, when you look at this one, man, okay? So they got a share offering, all right? 2 million additional shares, pushing the total outstanding shares to 58 million. Percentage-wise, that's a big big push, man. They only had 56 million shares outstanding. They add 2 million to the mix. I mean, what? That's almost a 3% dilution, something like that. Quick math. Many of these big companies, I always pull them up, right? NVIDIA has 2.5 billion shares outstanding. That would be akin to them, much bigger share volume. They only got 58 million. And as I said, you can't blame a company when their run-up looks like this, okay, of pushing some shares out at these lofty levels. I mean, do you remember the times that we had so many companies that had stratospheric runs during COVID? And, I mean, even during the meme mania, right, GameStop, AMC, right, companies like that. Yeah, when they get these stratospheric runs, okay, and they say to themselves, we would be fools not to offer more shares to raise capital as a business ourselves at these levels, but the only reason they do it is because they say, you know what, this might be a nice price point because I'm not sure if it's going higher. That's what the market listens to as well. So today, you kick things off with Supermicrocomputer off 10% to 902. And it's even more than that when you look at the fact that they were just trading at 1229. That's a weekly chart, okay? We put it back to a daily, and you see the acceleration. Yesterday, you were already at 1,000. You can see the rollover, right? I mean, look at it. This thing was trading at 1,077 over a month ago. I think that C-suite was probably saying, you know what? We better take this money over 1,000 right now because, you know what? This stock could be back at 600 in no time, okay? January 22nd, January 19th, this equity was trading at $400. You better believe they're anxious to push this out of 1,000. The market's probably looking at a little skittish right now. They're off almost 10% to 908. You got Bitcoin with some volatility to the downside as well, trading 63,780. Again, quite a stratospheric run for Bitcoin. And we jump over to Microsoft shares. They'll be talking about Microsoft coming up on Fast Market as well. Holding up relatively well in light of everything else, man. Microsoft only down 0.1%. When you take a look at some of the other AI darlings in terms of the pullback, right? NVIDIA shares off 2.3%, AMD off 4.2%. I just went over Micro Supercomputer. No, what are they? It's not MicroStrategy. MSCI? No? Forgive me. What did I just do? I just had it up there. Supermicrocomputer. That's what it is. SMCI. Yeah, not SMCI. Excuse me. Off 9.5%. Pretty remarkable. Let's jump around to some of the other FANG stocks. Apple shares this morning down about 0.1%. We jump over to Amazon shares down about 0.1% as well. Meta shares down 2.4%. So I bring up Microsoft, holding up relatively well when you think about they've been a part of the AI run, and you just don't see the type of volatility pullback that some of these other equities have, like a great company like Meta, where you give up 2.3% on the days when we got potentially some of those tech stocks pulling back. Microsoft, no, barely. Off 92 pennies from Microsoft shares so far this morning. Pretty remarkable. We check back in the dollar yen. Keep our eye on some of that action. We're climbing higher near the recent highs of 150.60. We jump over to the gold contract as we come into this next break. Gold down about $7 to 21.57, and we finished up with the dollar index. Dollar just under 104 at 103.91. Stay tuned, folks. We got another few equities to take a look at. When we come back, we'll talk a little bit of Fed as they're on the plate for tomorrow. We'll talk about interest rates. Stay tuned. We'll be right back. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of Basil's educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got markets dipping slightly lower on the open. You got the S&Ps off by 18 points now. We got a little bit of a lift, and then we pull back under 5,200. We're trading at 51.96. NASDAQ 100, that's a little bit of a slide. Break in the pre-market session lows. NASDAQ 100 now off 166 points. You're off by 0.9% in the red. 18,068. We check back in on some of those equities. Yeah, NVIDIA shares now off about $30, 3.4% for NVIDIA. AMD off more than 5% right now. Let me check back from Microsoft, holding up relatively well. Microsoft down only 0.1%. All right. Now, what else we got? Before we jump to the Fed, Unilever, right? So they're spinning off Ben & Jerry's and their ice cream unit, which also includes Magnum. I always see that Magnum. Ben & Jerry's. Can't beat Ben & Jerry's. Ben & Jerry's Reese's Peanut Butter Cup ice cream, probably my favorite in the world. Probably one of the most unhealthy ice creams you can have, but that's because they pack that ice cream full of cream, man. Premium ice cream. Ben & Jerry's, Reese's Peanut Butter Cup. Nonetheless, they're spinning that off, and the market likes it, man. UL is their symbol. Unilever up by 2.5%. You were as high as $51 for Unilever. We put that back on a weekly. Just chopping around, right? A little bit of volatility in both directions. And this morning, you're trading at 49.76. That's your weekly. You see a little bit of a lift as they will be spinning off that division, their ice cream division. And they mentioned it could impact about 7,500 jobs beginning right now and hopes to be completed by the end of 2025. All right, we jump back to rates. The Fed in focus. We're talking about a 10-year yield approaching, 4.3% right now. There's your weekly, okay? And let's back things up. Now, boy, I got to find this article, man. We got a lot. Is this the one? I don't think that's the one I was talking about. Forgive me 1 second. I got a couple articles pulled up here. No, it's not commercial real estate. Forgive me. All right. I'm going to have to find that one. Nope. Is this the one I was looking at? Yes. Okay, perfect. You got a few articles, to put it lightly, about the Fed, right? So this one from the Journal out this morning, okay? The Fed's playing a waiting game on rate cuts. The rules are starting to change. While investors focus on whether officials project fewer rate cuts, the Fed looks ahead to recession risks, all right? It's all theoretical, folks. As our man Kevin Hink said, nobody knows what's going to happen at 2 p.m. Eastern time tomorrow. Nobody knows what those dot plots are going to look like. But it is interesting to try and game out, right? What are the influences that are affecting them? What are the risks that they have? And just looking at kind of the historical perspective of where we are right now, where they've been in the past when they've went on these type of hiking cycles, okay? This is the cumulative change in the federal funds rate since the start of the initial rate increase. It's been one of the fastest hiking campaigns they've ever achieved, folks. This is 2022 in the black. You go from 0 to 5.25%. You almost get there in a matter of 12 months. We're sitting there at 18 months right now is where we are, okay? And look at some of the other hiking patterns. So much slower. So they ramp it up. Inflation, we haven't faced inflation like this in a generation, okay? So they come with it. They bring the pain. We're there. Now, how many months are in between their last increase and when the Fed starts cutting, okay? This is months between the Fed rate changes following the last increase, okay? So it's saying how long does the Fed usually go when they go on these type of hiking cycles before they actually end up cutting? We don't know what this time's going to look like, but history is an important perspective to have. And if you look at it, the top one is where we are right now. It's been about 8 months since they last hiked, okay? And look at the prior campaigns. Now, the 2006 to 2007 campaign, they went 15 months from the time that they hiked to where they cut. What is interesting, when you look at that, this is, again, the 2006, 2007 campaign, okay? And when you start looking at that, okay, that's the only outlier. Every other time, you were right at basically where we are right now. You had the hiking cycle of 2019, they gave it 7 months. 2000, 2001, they gave it 8 months. 95, 5 months. 89, 4 months. They're in the ballpark, but the data's got to line up, okay? Yeah, to put it lightly. And then you look at the effective federal funds rate and what follows, okay? A growing number worry more about the latter scenario, talking about recession, okay? What officials ultimately do boils down to what problem they decide is easier to fix. It's called risk management, is how the journal's putting it. If demand is stronger than inflation, stickier than expected, the Fed can postpone cuts. If demand and hiring weaken more than anticipated, the Fed has ample room to cut rates, but probably won't be able to move quickly enough to forestall a recession. And just look at kind of the prior campaigns, right? You back it up to where you were in 2000. You hike, the recession follows, okay? You get into the 2007, 2008 hiking campaign, you hike it up to right where we are right now, recession follows. You could probably make a pretty reasonable argument that the financial crisis from that area vastly contributed to the recession that followed. You even look at where we were in 2019, brief recession right there. Is this time going to be different? I don't know. We'll find out. But as you see, the recession follows after they start cutting. They're usually a little bit late to the party, right? Maybe if they started cutting a little bit quicker, maybe they could have avoided that recession, but then they would have risked inflation running rampant, right? At least this time, that's the risk. You got two risks. You could start cutting right now, okay? That would spur the economy. You'd have less of a risk of a recession, but how do you start cutting right now when, as Kevin put it, man, the economy might even be heating back up. We've got wages that are on fire. We got an unemployment rate that's 3.9%. So we hear a lot from the Fed tomorrow. We're going to get the dot plots. We're going to get an update. Rates are going to stay where they are right now. And June seems to be the perspective that maybe we get our first cut. And how many we're going to get from there, the data is probably going to decide that as well. These data points in the next 3 or 6 months are going to be very important, but that's been the case. It is remarkable that it seems like the shift keeps going forward. Right? Every time they think it's coming, the data doesn't line up. We push it back 3 to 6 months. This economy is pretty robust right now. AI is the super fuel that is allowing the economy to flourish, even where rates are right now. Okay, productivity is through the roof. It's going to remain through the roof when you think about the productivity gains that are going to be possible with some of the AI that is coming into every single tech company in the universe. And so that's allowing this economy to remain hot even at a time when the Fed is in a fairly restrictive policy rate. So we find out tomorrow, but it is interesting when you look at the historical perspective, right? When they go on these hiking campaigns, they usually are in the ballpark of 7 to 8 months in terms of when they start cutting. Well, right now, we're approaching, if they go to June, you're looking at maybe even 12 months already. And the longest one on that chart that I just pulled up, okay, which is almost a little bit of an outlier, is they went 15 months, okay, and that was from 2006 to 2007. Yeah, so we'll see where we go, man. But we find out a lot from Chairman Powell tomorrow, to put it lightly. All right, we'll jump to there. Bank of America CEO says the commercial real estate will be a slow burn. Moynihan out there. We're careful in how we underwrite as an industry. Now, one thing to consider, folks, the big banks do not have the exposure to commercial real estate like some of the regional banks, okay? So Bank of America, JP Morgan, Citi, Wells Fargo, they're going to be fine. There are going to be pockets in this commercial real estate, especially if the Fed stays where they are for an extended period of time, man. And yeah, it is going to be a slow burn, but the big banks aren't going to feel it, which is probably good for society. But boy, some of those small banks, man, they need some rate cuts. We'll see what the Fed has to say tomorrow. One more segment, folks. Don't go away. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly Gold Report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of Basil's educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps off by 15, NASDAQ 100 off by 145. Jumping around to some of those banks. New York Community Bank down another we'll call it 4% right now. It's only 15 pennies, right? But they're only a $4 stock. They're a $3.50 stock. You talk about some volatility. You look at this thing from their earnings. You look at this drop-off that they had recently, and you're just chopping around the $3.50 range right now. New York Community Bank. Now, the news out there, CNBC, one of their reporters, Hugh Sun, okay, banking reporter over there, talking about this article having to do with Claros Group. Okay, they analyzed 4,000 institutions. They found 282 of them with both high levels of commercial real estate exposure and unrealized large losses from the rate surge, right? We all know about those unrealized large losses. Now, what's interesting here is kind of what I was speaking to coming into that break. these are smaller institutions, okay? 282 of the institutions are what they line up in terms of where they may be in that troubled area. There's only one company with more than $100 billion in assets found in that analysis, though, okay? Most of the banks deemed to be challenged are community lenders with less than $10 billion in assets, okay? Just 16 of those companies are between 10 and 100 billion. Collectively, 265 community banks combined. They hold assets, 265. So it is the smaller banks. There's going to be pockets. New York Community Bank is obviously one of them, but there's going to be some other outliers out there. 900 billion in total assets are at risk there. That's how they put it. And yeah, you see that 265 of those banks, 363 billion in total assets. So smaller banks, regional lenders, man, they're the ones that usually are the backstop for commercial real estate, and they're the ones that are going to be in trouble, especially if the Fed takes a while. And one thing that one analyst noted here, if there were 10 banks that were in trouble, right, we could sort this out. They would have been taken down and dealt with, but you got hundreds of banks. And so that may be the slow burn here, because you can't just cancel 265 banks and make that go away, folks. It is a problem, and rates where they are with commercial real estate, asset prices where they are, it's a double whammy across the board. Folks, thanks so much for tuning in, kicking off your day. Basil Chapman's up next. And folks, tonight, 4 o'clock, Basil's got a webinar for opening call subscribers. Don't miss it. Go sign up on the front page of TFNN right now, or you wait for Basil. You'll be in there for 90 minutes tonight with our man Basil Chapman.